Hey guys, thanks for coming tonight. If you'll scan this QR code, it will give you access to the portal and all the information and PPM and all the documents that you need. If you have questions tonight, please drop them into the chat or the Q&A. If you're watching this on a recorded line, either text your questions to the number here or shoot us an email at the email here. For those of you that don't know who we are and what we do, this is just a little introduction video that we put together. Tells you, why I'm so passionate about these types of investments and how it's changed my life. We talk about some of the common tax mitigation moves that we use here, and I think you'll find some interesting information there if you haven't seen it before. So tonight we're doing an update on smart management. Typical disclaimer, we're not CPAs, financial advisors, attorneys. We can't guarantee any type of an outcome. These are investments. They can go up, down, or sideways. For those of you that don't know me, my name's Tyson Cobb. I'm a semi-retired orthopedic surgeon. I left my group in 2019 and dropped back to 1 day a week. I thought my income was going to drop off substantially. Moved into real estate and other alternative investments, learned how to mitigate taxes, and my net worth exploded and went the other direction. And it's allowed me to work less, make a ton more, and pay a lot less in taxes. So it's been a beautiful transition for me. As your active income gets replaced with passive income, you get your time back, and it allows you to live life by design. We recruited Donato Q4 of last year. He spent some time at the Department of Defense, entered real estate during COVID, and acquired 176 units by the age of 23. He's the former director of acquisitions at one of the major multifamily investment firms here in the U.S., co-founder of a prop tech startup with a portfolio of 600 plus doors. And he leads our acquisitions, deal sourcing, and investment structuring, and also our masterminds. Tracy Ramos, our Director of Investor Relations. She spent 17 years in private banking. She was my private banker for 15 years, and she handles all things relations. So if you need help making anything happen, filling out documents and so forth, she can take care of that for you. If you need introductions with tax professionals or people that can set up self-directed retirement accounts so that you can invest in these kind of alternatives, she can make that happen as well. What do we do here? I spend most of my time researching and vetting deals and sponsors like the one you'll see tonight and the one you'll meet tonight. Because of the amount of capital that we place each year, which is around 36 to 40 million last year, it allows us to get into a lot of good deals and negotiate superior returns. We do have a ton of highly vetted people that we can introduce you to if you're needing help with CPAs and different types of advisors and strategists. And we do a lot of educational webinars here. Our mission is to be your trusted partner on your journey to financial success, and we can do that by helping you mitigate taxes and get into better alternative investments. Cobb Club is one of our masterminds we started this past year, and Donato's spearheading that, so I'm going to let him take charge here.
Thank you very much, Tyson. The Cobb Club is our answer to how we can serve our LPs and our clientele, even at a higher level. And that really culminated into Cobb Club becoming our private white glove membership that provides all of our accredited investors an opportunity to get improved investment economics on a deal by deal basis when they're available, advanced tax optimization education and support, and personalized conversations around how we can help maximize your wealth creation and your retention of that wealth through investing in different private alternative investments. With Cobb Club, we have a lot of benefits that our members can enjoy, including early access to all of our new deals. So our Cobb Club members get to preview to review capital deals and underwriting frameworks before public release, and also get invitations to our annual retreats, where we'll do 3 day private events at Tyson's Farm in Southern Illinois, as well as international retreats in places like Cancun, where we're bringing together every Cobb Club member or those who are able to attend for small group masterminding, networking, and workshopping with folks who are like-minded on the same wealth creation journey that you are. We focus a lot on advanced tax optimization education, from cost segregation studies to real estate professional status, short-term rental tax loopholes, SDIRA planning, discount Roth rollovers, and basically other mechanisms to help keep more of what you're earning And we do that through a variety of wealth strategy calls where we bring in expert insights through a professional network of CPAs, attorneys, costing providers, financial advisors, and so on and so forth to help you get to where you need to go. In addition, our Cobb Club members enjoy what we call the Cobb Club class of shares or improved economics. What this basically means is that one of the benefits of being a part of the Timberview audience, as you all are this evening, is that when you invest in deals with us, you get better returns than if you were to go directly. The Cobb Clubbers enjoy an additional level on top of that, where they get even better returns on top of these deals. And that could be anything from a better equity multiple, higher cash flow, lower minimums, or so on and so forth, as for being a Cobb Club member. That does change from deal to deal. We'll have a little bit more about that in the next slide. Finally, our Cobb Club members can get priority consideration for our oversubscribed offerings and enjoy lifestyle benefits like our property exchange and tax-free guest rule income opportunities. Focusing on our economics of Cobb Club class of shares, so far we are proud to announce that of these 12 deals now that have been launched this year with the Cobb Club benefit, the total aggregate value being in these deals as a Cobb Club member is over $190,000. We're simply investing in these same deals by being a part of the Cobb Club is projected to earn over $190,000 more than if you were investing as a Timberview audience member. So it quite literally pays to be in the room. We're very happy about that and proud to continue to add more of that over time. Finally, we have our Timberview Academy, which is on the other side of the spectrum, where Cobb Clubs are people looking to get that next level of support and step up their game when it comes to their investing. Timberview Academy is looking for those who are trying to go from 0 to 1, which is if you don't know how to invest in a private opportunity, you're a little bit nervous about how to pick the right deal, or you are looking to gain the confidence to be able to make your first investment. That's what Timberview Academy is for. It's all about learning, connecting, growing, and getting to the point where you can say, yes, I'm ready to make my first or next investment, and learning the basics of all things from syndication to taxes to how this whole industry works. Benefit for us is that our goal is to have a massive impact on our community in doing the Timberview Academy, with all proceeds from Timberview Academy after expenses are slotted to be donated to charity. We're very happy about that, and it's right in line with our Timberview Capital core values. So if you're interested in getting access to the Timberview Academy and you want to get that foundational knowledge to make your first or next investment, you can scan that QR code and join the waitlist. And of course, Timberview Academy is a free benefit that all of our Cobb members enjoy as well. If you have any questions about Cobb Club, the benefits, Timberview Academy, what it's going to look like, or anything about any deals that we have coming up, including this one, you can scan this QR code and book a time with me personally. And I'd be happy to have a 15, 20-minute conversation with you about any questions you might have, the benefits that these different groups have, and what makes most sense for you in 2026. I look forward to talking to you guys about that at your leisure. So now let's go ahead and transition and talk a little bit about the opportunity this evening. At a high level, we're going to talk a little bit about what the returns look like first, what they're projected to be over time. Again, every return that we talk about is a projection, they're not guaranteed. So, with the opportunity tonight, we are able to offer a 5% preferred return for the Timberview Capital Network, or our Cobb Club members are earning an 8% preferred return, a 4x projected target equity multiple, and a total of about 77% targeted average annual return with a 3 to 5 year hold period and 3 to 1 year one depreciation. Those of you who don't have quite confidence about what that might mean, what that looks like is that a $100,000 investment in 2026 is projected to generate $300,000 in depreciation deductions for 2026. So it's a very efficient way to mitigate your tax bill and reduce taxable income by investing in this opportunity while also being able to be exposed to high equity growth opportunities and high preferred returns. Now, what is it you're actually investing into as a part of this opportunity? Well, it is the Smart Management Platform, which is essentially a all-in-one AI-enabled property management software that's been dreamed up by Tim Bratz, our other host this evening, and his team, designed to solve the massive destroyer of real estate value, which many of us know and love and fear, poor property management. And so what this technology is a culmination of thousands of units worth of working with the largest providers in the space from coast to coast and stealing where the large operators and large technology platforms fail. And the thought of if we can build our own version, we could probably do it better ourselves. And that's where smart management comes in. So investing in this opportunity is investing in the software platform product that is being rolled out to different property managers and owners across the country to use and implement this platform into their buildings for the purposes of property management. Go ahead to our next slide, please. Now, key highlights of this entire deal. Why are people interested in the smart management opportunity? And to be clear, this is the second capital raise that we've been a part of with this organization. We did one in late 2025, going into 2026. And we've been very fortunate to have dozens of our Timberview Capital audience come into this opportunity at this point. And tonight, we're going to talk a little bit about the updates of what's going on here. But high level overview for those who are not quite yet familiar with smart management is that the platform is offering multiple recurring revenue streams through things like software subscription fees, normally charged on a per door or per unit basis, tenant screening services, rent payment processing, insurance integrations, which is a big one if you can offer insurance integrations for a lot of different property owners, and vendor partnerships. Second, large addressable market, over 50 million rental units across the United States, and massive depreciation. So for those of you who are familiar with depreciation, many of you are probably thinking that, well, Donato, I can only get depreciation equal to what I invest. I can't, lose more than I put in. So how are you getting depreciation that's higher than 1-to-1, getting 3-to-1 depreciation? Well, it's not very common. It's one of the biggest benefits of this opportunity is that you get very high ratios for your depreciation. And we're going to have Tim talk a little bit about how they're achieving that a little bit later in our presentation. But through multiple revenue streams, a large addressable market, and very high tax benefits through both active income and passive income, which again, we'll talk a little bit about later in terms of what path you want to choose. It's a very efficient way to help mitigate those taxes this year. Go to our next slide, please. Perfect. So let's talk about depreciation. So all investors can use passive losses or deductions from one passive activity to reduce the taxable income or gains from other passive activities, right? Think about depreciating your real estate investment property to offset capital gains or rental income, things of that nature. Offsetting active gains, which is you have a very high W-2 income and you do not want to pay taxes on that high W-2 income. That's your active income, normally untouchable by depreciation. Now, PM can be grouped with another permissible activity, which is often your core operating business, so that together they form one economic unit, which is a fancy way to say that a bunch of people participating in a project together, that doing the right types of activities can, through a bunch of different hoops, qualify for mitigating their W-2 income, as opposed to only being able to mitigate their passive income. What that essentially means for you is that Tim and his team and his army of CPAs and financial advisors have put together a very specific playbook that writes out how you, as an investor in this opportunity, are able to achieve not only 3-to-1 passive depreciation for your particular financial situation, but there's a mechanism for you to be able to take that depreciation and apply it to your active income. So if someone of you are earning $200,000, $500,000, $700,000 per year in W-2 income, being able to invest $100,000 right off 300,000 of W-2 income can very quickly start to mitigate, if not even entirely replace or wipe out your taxes for the 2026 year, depending on our specific financial situation. So that's the basics of the depreciation, and that this fact that this opportunity provides not only outsized depreciation, but ways for you to get both the active side and the passive side. Go to our next slide, please. Perfect. So what we're going to do now is go to our next slide and introduce our lovely co-sponsor this evening, Tim Bratz, who's the CEO of Smart Management and the owner of Legacy Wealth Holdings, owner-operator of over $350 million in commercial real estate, about 2,800 units in 8 states. So this is where the I know the problem, I know the pain, let me build a better solution comes in, and is a recognized thought leader with a network of hundreds of thousands of real estate pros nationwide with industry expertise in this market to help guide the platform to where it needs to go. So Tim, if you want to go ahead and say hi and introduce yourself to our group.
Hey folks, how we doing? Good to be here. Appreciate you guys having me. Donato, thank you for the introduction. Great overview of what we got going on in smart management. And I'll share a few more, get a little bit more granular into some
Perfect.
things and really, share an update of where we're at. This the original recording of what is smart management, where I get all excited and all passionate about what we're doing, what we're building, and how this is an all-in-one property management software layered with artificial intelligence and all sorts of automations, and how it combines a CRM with workflow management and payment processing and accounting and property management and communication and all the other intelligent automations, and puts it all into a singular platform, and how it's a desperate need in the property management business, is in a previous recording that's fully available to you guys in the Timberview platform. So make sure you go back and you watch that, right? You'll be able to really understand that. I think the goal of today's presentation is really for me to give you a high level overview of since then, right? Where are we today? And then answer some Q&A for you all. So that way we can be a little bit more time effective and time efficient. So that being said, our software is very highly focused, and one of our core marketing tools and things that we talk to our potential customers about is 10-20-30 framework. And what our software does is it does everything you would expect in a property management software, plus far more. And we can quantitatively show a 10% boost in occupancy, a 20% reduction in expenses on a commercial property asset, and a 30% decrease in burdens and redundant tasks, and just creating a higher level of efficiency. So that's the 10-20-30 framework. 10% boost in occupancy might not seem like a lot, but if you're hovering at 80% occupancy, which is usually the break even on most of these larger apartment complexes, and we can show you how to boost up to about 90% occupancy, that's 100% of the cash flow. That's 100% of the profit. That's 100% of the operator's ability to make a distribution on that property. By being able to take expenses, which have gone just completely haywire, and we've been able to quantifiably show a 20% average reduction in expenses. And I'm going to talk about some of those ways that we've done it through some of these updates and some of the affiliate partnership that we've created over the past 6 months. We can quantitatively show a 20% reduction in overall operating expenses, which is massive. That's a massive change. If you can reduce expenses from, $2 million a year down to $1.6 million a year, that's a $400,000 annual savings to the net operating income. The way that these properties are valued is based on the income approach. So a $400,000 savings at a multiple valuation, you're talking about, here, let me do some quick math. $400,000 divided at a 6% cap rate, you're talking about a $6.5 million increase on the valuation of that property, just because you've been able to utilize our software, which can help show a 20% reduction in expenses. And your staff is more efficient by at least 30%. We can reduce burdens, we can reduce redundant tasks by at least 30%. So we're very focused on what actually matters. Right? We have real-time reconciliation of financials where we can show in real time, having transparency of data, so you don't have to wait until the 15th of the following month to get a report from your property management division. You actually have it in real time by pressing a button. We have all sorts of proactive metrics and forecasting, task prioritization based on economic impact to the property, like some really cool stuff that nobody else, and we've used all the other third-party property management softwares. We've used them all, and none of them touch what we do. We are so focused on optimizing net operating income. That is where the pain point has been in property management, and in multifamily ownership over the past 4 years, has been in nobody has been optimizing. Nobody's been obsessing over the vitals of the business. And that is optimizing to increase income and to decrease expenses at the property level. If you can do that, then you can optimize the asset value, which then takes a loser of a deal and makes it above break even, or takes a break even deal and makes it a very profitable and a double, triple home run of an opportunity. So it takes the tough deals and turns them into winners.
And for everyone here who is investing in multifamily or has exposed in multifamily, if you knew that you were going to invest in a property and that operator had an opportunity to increase the property that you've invested in, increase the occupancy by 10% and boost their NOI by 20%, and they weren't taking it, how frustrated would you be? if I was investing in multifamily and the operator wasn't doing that, I'd be pretty frustrated, especially if that means $6 million of value creation that's ultimately dollars in your pocket is not being generated. So it's
Mhm.
not just about streamlining workflows and making numbers look bigger. It's ultimately about how do you help mitigate the downside risk for investors like yourself and create ways for people like Tim who are operating deals to boost returns, boost the property value to help take care of you guys, the investor. So all of it comes back to how do we take care of the people whose capital is being trusted to these opportunities. Now, Tim, do you have any slides at all for us this evening that you wanted to show at all, or do you want to go ahead and have us
Yeah, I'm
focus
going to
on?
give you what I'd like to do is just give a couple of updates on the software, and then I'll dive into a
Perfect.
few of the features and benefits and stuff that we've and the partnerships and affiliates, and I'll share some slides on that. But
Perfect.
um, so there's probably a few question marks of like, is the software live? This is not a startup in that like we've never made money. We are live. Every single partnership is in place from a standpoint of all software partnerships are fully executed, fully integrated, and live. So all the payment processing, the ACH payments, the credit card processing, um, all the marketing partnerships, and all these things took a lot of time, way more time than you would ever imagine, in order to then create compliance with all the banking side of things and the marketing side of things, and then they have certain plugins and APIs that you need in your software, and you have to like build out your software in order to do all this stuff. So it just turns into a bunch of technical stuff, but it takes a long time, and it is a very thorough process. We had most of it in place, 6 months ago, or I guess almost 9 months ago now, when we first did this presentation. We had a lot of things that were kind of coming to fruition, but all the trains kind of met at the station at the same time. So we feel really, really good that finally all of our software partnerships with all of the marketing, payment processing, finance side of things are all fully executed, integrated, and live. So we're really excited about that. We have officially onboarded my portfolio, which is a paying customer. I have about 2,000 doors that we in-house manage in our portfolio that have been onboarded and utilizing all aspects of the software. And we have a wait list lined up right now where we have already onboarded and done the initial onboarding, the compliance side of things and underwriting. And then we will be onboarding somewhere up to about 1,000 doors in August for September rent collection. We have another 1,000 lined up thereafter, and the goal is by the end of the year to put us in a position where, we've kind of gone slower in order to go fast later, right? And we've put ourselves in a position to onboard 1,000 doors in September, 1,000 doors October, 1,000 doors in August with September rent collections, 1,000 doors in September with October rent collections, and put us in a position where our team is built out and we've worked through any sort of bugs in the system, anything along those lines for December 31st. So that way we can start sprinting January 1. And the goal is to hit about 10 to 20,000 doors on our software by the end of this year. And that'll put us in a position not just to have those doors, that's great, but more importantly, to onboard somewhere between 5 to 8,000 doors a month moving into 2027. So now we're positioned to bring on another somewhere between, call it 60 to 80,000 doors in the new year. And then we're on target to hit our goal of 100,000 doors by the end of 2027, which is our kind of our short-term, midterm goal. We hit that and we're fully rock and rolling. So we fully integrated our AI chat bots, our AI agents. We've accelerated all of our workflows. There's all sorts of event and time-based automations and integrations that we've put into. Like we've uploaded our entire internal standard operating procedures from our operation of owning over 6,000 doors in our experience and coaching tens of thousands, hundreds of thousands of doors amongst our mastermind and things like that. And we've taken all of those standard operating procedures and integrated them into the software. So if somebody who wants to utilize smart management doesn't have the level of experience that we have, they can just piggyback on our SOPs and expedite their timelines and not have to lose time and lose money the way that we had in order to learn these things. It's already automated and integrated. And if there's somebody in maybe a nuanced market or has a certain level uh, customization that is needed. We can fully customize any of these SOPs in order to meet their needs. So that is all built out and fully integrated into the software. Our call responder is launching in August. That's our call responder when people make urgent phone calls in. It does intake and then reroutes it via an individual or an AI agent in order to then create a work order, workflow, and work through that with the tenant. So let's say there's a tenant maintenance request and their furnace went out. Right now, they can send a text message into our AI chat, and our chat bots will actually talk with that tenant, work through any sort of helping them work through repairing it on their own. So let's say the furnace is out. The AI agent will actually search the unit and then look up the make and model of the furnace unit that's in that apartment. It'll then read through the entire user manual of that furnace unit, and it will work through troubleshooting the top 3, 5 things in order to get the tenant to fix the issue. That eliminates around 20 to 30% of all work orders. And so it never even goes to a human being and the problem gets resolved. So if you can eliminate that, and if you can't eliminate it, then it creates a work order, puts it into the workflow and the task list for the maintenance person the next day, and prioritizes it in their task list based on financial impact to the property. Obviously, the life safety stuff gets prioritized first, and then it's based on financial impact to the property. So this is something that you would have to rely on a maintenance guy to prioritize, or somebody else on your staff to prioritize on a daily basis. It is already built out and automatically sorted through our SOPs and internal automations that we've put in place. So we're super excited about that. A big one, which Donato had alluded to, is smart management insurance partners. We've actually created an insurance company where we own 50% of it. Smart Management owns 50% of this insurance company. And we've created a master insurance policy that we can now invite users of Smart Management onto our insurance policy. Current pricing is in excess of 30% savings for the people who are currently on our master insurance program. So this is a huge lead lead placement in order to drive people to have a conversation about smart management, because we can right out of the gate help them save over 30% on one of the largest expense items in their property, right? We also have affiliate partnerships that we're working through and inking deals on in the next 30 to 60 days on nationwide property tax appeals, on nationwide suppliers of material and supplies at extreme discounts, by the way. They could never get it without our scale and our what we've put in place. We also have partnerships that we're working through on everything from water valves that reduce your water bills by somewhere between 15 to 25% on an annual basis, to in deregulated states, having deregulated electricity, natural gas suppliers at fixed rates at a lower cost or kilowatt per hour than you can find on your own. So we're working through all these different kinds of things and have several affiliate partnerships that deals that will be inked in the next probably 60 days, and just putting the final touches on all of those agreements. So a lot of really, really cool stuff in line on that front. Let me add, tell me if you guys can see this.
Yep, we got it.
Cool. So things that we already have: smart metrics, giving metrics on real, true occupancy, right? Not just physical occupancy, but what's the true economic occupancy? How many tenants are in place? How many of those tenants are paying? How many of those tenants are under eviction? How many of those, what's the delinquency report? How many of those tenants have given notice to vacate? right? How many leases are coming up in the next 30 days, 60 days, 90 days? How many of those tenants have already signed lease renewals, right? How many rental applications are in, right? Based on your marketing efforts and history, how many leases do we expect to sign this year? And are those leases replacing paying tenants or non-paying tenants, right? Like all these different things that you would have to take and insert into an algorithm and expect a human to figure out, and nobody does it, right? Our system automatically does. So that's all completed. Our marketing partnerships are all done. Property website builder is all set up where people have either property managers will have their own property website built for them free of cost. This is something that costs us $5,000 to develop on a per property basis and several $100s a month on a per property basis. We give this to our users at no additional cost. Expense tracking, activity logs, everything that you would want. Let's say there's a slip and fall, right? Or some sort of a tenant liability issue that pops up for the property manager, for the owner, and it's a he said, she said thing. Or maybe there was communication done on a property manager's personal cell phone or Gmail account. That doesn't happen here. Everything is communicated through the Smart Management app. And because everything's through the app, there's an activity log where you could literally press a button, hand it over to the attorney, and show that there was communication between the tenant and the property manager or the maintenance person or the leasing agent, and showing the entire activity log on that front. So a lot of exciting stuff. We also have several product features that will be completed before the end of this year. The big one is our short-term rental management. Nobody integrates short-term rental management of Airbnbs and VRBOs with the long-term property management side of things. And so one of the things that you've seen, like, property owners and multifamily owners have had to get really creative over the past few years because of the rising expenses on the property level and rising interest rates. And so one of those things that we've integrated in some of our properties, we've taken a portion of our units and we've turned them into short-term rentals. We furnish them and we rent them out either as furnished rentals on an annual basis, midterm rentals to like corporate housing, or short-term rentals on Airbnb. And we generate far more rental revenue that way. And so this is a great way where we can help people boost their occupancy at their properties and easily manage it without having another 8 different softwares. Everything's integrated, all the financials are integrated, all the marketing's integrated, everything's in one place. And so this is the big thing that we're launching this year, and super excited about. The other thing that'll be done this year is reputation management. So reputation management, you might see this if you've been to a doctor's office or a restaurant. You get an email after visiting and it says, how was your experience? Thumbs up or thumbs down? And if you click thumbs up, it takes you straight to like a Google page or Yelp, and you give a 5-star review and it becomes a public positive review. And it boosts that business's Google ranking because of all the ratings increased. If they click thumbs down, it takes it into a private documented area where the disgruntled customer can say, hey, this is all the things that went wrong. I'm unhappy. It's a 1-star review, but it keeps it because it gives them the ability to have the outlet, right? But it keeps it all private. And it gives us the ability to have our property manager or leasing agent or maintenance team reach back out to that customer, that tenant, and rectify the issue, right? But that negative review never goes public. So it keeps it private. And this is something that restaurants pay $500 a month for. We have it built out in Smart Management where we're going to give it away for free to all the different properties. And it makes the complete difference in just the same way that you shop for a car online before you ever go into a dealership. That's what happens with tenants today. They're looking online at the reviews, and if the reviews are bad, they're not even coming to an open house. They're not even coming to look at a unit, even if the pictures are nice, because the reviews are so negative. We've implemented this in several of my own properties that we've had to take back from bad third-party management that just tanked our reputation. And we had 1 and 2-star average reviews. In less than 6 months, this has been able to boost us up into the high 3s and low 4s across all of our properties. It is a massive difference maker to the leasing side of things, and the general occupancy of the property. So that'll be done by the end of the year, given away for free with the property management software. We'll also have a vendor management portal, something like this. This is cool because it not only there's a lot of crazy stuff going on right now, as you've seen with like emails and wire fraud and things like that, where I've heard of horror stories where people send payments of $30,000, $200,000 to an email or to an account that they got an email from that looked like it was from somebody that they knew, but somebody had hacked into the other person's email, changed the wire instructions, sent over an invoice, told them to pay it, and someone in the team didn't catch it, right? The accounting team didn't catch it. They sent a payment out and it's lost forever. There's no way to recuperate that. That's an issue with paying vendors, especially with multifamily properties where you're spending a lot of money and paying big invoices. I mean, we're talking tens of thousands of dollars is a pretty middle of the road invoice, right? It could be hundreds of thousands of dollars at a time, especially on new construction projects, heavy value add projects. And so the vendor management portal requires the vendors to set up their own account, link it to the property owner, upload their payment information and their wire information. It also tracks emails. So if an email comes through from a new email account or something that looks like it's spoofing or spamming or phishing, then it will flag that email and say, hey, check out this email. Make sure that this is somebody that you know because it's from a different email than what they've communicated with in the past. And so it does this through this encrypted programming to then reduce liability on the property level, reduce the risk on the property level, and standardize how the payment process works, right? Like if you are not on the vendor management portal, guess what? The vendor management portal automatically requires vendors to sign off on a limited lien waiver in order to then get paid. And then when they get paid, they have to sign off on a unconditional lien waiver, right? And so it does the things that you should be doing from a good business practices standpoint, and it automates it for you. Employee locator, think about Life 360 where it tracks, like your family members. Instead, this tracks employees of yours. So if they say that they're going to Home Depot, they're actually at Home Depot and not, hanging out at the park. Or we've integrated it with our maintenance side of things where it will actually notify other tenants who are in the queue of having work done as work gets completed at unit number 1. It'll notify the tenant in unit number 2 that the maintenance person is on their way. So it does all the different things, holds the team and the staff accountable, and there's a customer service aspect. That will be probably at the end of the year, maybe beginning of next year. Same thing with this one, end of this year or beginning of next year, the construction management where it automates Gantt charts, submittal generators, doing all those things that I talked about with vendor management. Those two kind of go hand in hand, but it's even more robust than the vendor management. The draw processes, it standardizes, saves literally dozens and dozens of man hours every single draw process on a monthly basis for people who are utilizing this from a construction management, new construction, and getting draws from their lenders. This is so good. I think it'll eventually be a requirement from lenders to use smart management because it makes everything so easy. You literally press a button. You don't have a bunch of Google Drive and Dropbox folders and attachments and all that stuff. You press a button and it will send everything that the lender needs in order to process an escrow release. And then again, towards the end of this year, beginning of next year, we expect 360-degree photos. So this is something where you can actually scan a room with your phone. It will create a three-dimensional floor plan and it will digitally stage it. So you can utilize it from a marketing standpoint and have that for your marketing efforts. And at the same time, it'll measure the floors, it'll measure the windows, it'll measure the walls, and it'll tell your team how much flooring they need to order, how much paint they need to order. And eventually this will be integrated with our national supplier where different SKUs will be available, where they'll be able to press a button and order the exact amount of flooring in the exact color and type of luxury vinyl plank that they want, and it'll ship it directly to the property at our deep discount. And it'll automatically upload it into Smart Management and link it to that unit, link it to that property. So if they ever need to patch the flooring again or match the paint color again, they know the exact color that was used, they know how to get it, and they can do that in the future. So it eliminates waste and creates far more efficiency in all things. So those are some of the updates. That's where we are with everything. We have a $15 million raise that we're doing this year and providing depreciation based on that. We've already fulfilled on over $5 million of that, which is kind of a big deal because people usually don't even think about the tax side of things until November and December anyways. So to have a third of it already filled up is a big deal. And we are now opening up, phase two of that, which is the final $10 million at a 3-to-1 depreciation. So let me see if I have all the revenue streams, all that stuff. Yeah, so as Donato had kind of alluded to previously, we're paying a 5% preferred return. We're going to ask that accrues for the first, call it 12 to 24 months. And then we'll have that caught up and then paid current thereafter. Your equity ownership at 500,000 doors, which is our goal in the next 5 to 6 years, your equity value, in addition to your $100,000 investment, is another $300,000. Now, this is only realized if there's a capital event, right? If we sell, if we go public or something like that happens, you would realize that money. But it's real value that you own in a private company. And so you can add it to your personal financial statement. It is true additive to your net worth. And you can, by the way, you can go and sell that if it's, as long as it's to another accredited investor, as long as they don't have a bunch of felons and stuff, then you can also sell this at whatever valuation you can negotiate at any point in the future. So, and it kicks off real cash flow. So for about every 100,000 doors, it'll kick off around $3,000 of positive cash flow in addition to your preferred return. So as we get into 300, 400,000 doors, you're talking about somewhere between $10,000 to $15,000 per year of additional cash flow that your equity is kicking off in addition to the preferred returns. We actually don't need all of the capital. The capital actually is sitting in an operating account, a high interest bearing account. And we have it sitting there because the revenue from the interest that comes in exceeds what our operating expenses are. So it's the whole rich dad, poor dad theory. But instead of using it for our personal finances, we're using it for our business, where we're raising enough capital, putting it to work in a high yield account. That high yield account kicks off enough interest income where now that surpasses what our monthly expenses are. So now we have limitless runway. And as we grow our user base, and we get up to about 200 to 300,000 doors, we plan on siphoning that capital back to you and returning it to you either in parts or in whole. Starting at about 36 to 60 months from now, we expect all your capital to be returned. And at that time, you still maintain your equity, right? So even though your money is back, and your money's no longer invested, the preferred return goes away, but you have all your cash back and you still maintain your equity until some future capital event. And the cash flow from that equity keeps on getting kicked off. And the big incentive for 2026 is that for every $100,000 invested, you're getting $300,000 of bonus depreciation. So what does that, hang on a second, what does that mean from a return standpoint? Over the course of 5 years, we see a preferred return of about $5,000 per year per $100,000 invested is 25 grand. Your equity value of 317. We expect cash flows to be around $45,000 to $50,000. So your total targeted value return is about $388,000 on $100,000 invested. You divide that out by 5 years, it ends up being a 77% per year average annual return. And here's the real benefit. If you are in the highest tax bracket and you can offset active and earned income, we have paths to do this, and we can open up the Q&A and talk through this if you guys like. But $300,000 of depreciation this year at the highest tax bracket, if we can offset $300,000 of active income in the highest tax bracket of 37% on the federal level alone, that's $111,000 of tax savings that you're able to save. So you're either going to write a check to the government for $100,000 or $111,000, or you can write a check to Smart Management for $100,000 and get the tax benefits that come with it, along with having the upside of it. So it's a no-brainer for somebody who can offset it from an active standpoint. But even if it's a passive offset at 20%, you're still able to offset about $60,000. So you're able to get all these benefits off of essentially coming out of pocket about $40,000 and divide it by a total targeted return of 388,000 over 5 years. And all of a sudden the return, when you start calculating in the tax benefits, it takes it and exponentially increases it. So it gets really, really exciting at that point. So anyways, I'll kind of open it up for Q&A and stop the screen share right now and answer any sort of questions that you guys might have.
Perfect. And Tyson, if you are able to go ahead and put that QR code slide back on the screen, for anyone that's interested in learning more about this opportunity, wants to see the full documentation portal and be able to start looking into potentially participating in the investment opportunity, you can scan the QR code that Tyson is putting back on the screen here in order to get into the cash flow portal link for this and read through all the different documentation that we have available for it. Now, in the meantime, we'll go ahead and check our chat and Q&A for any questions that got submitted in advance. I'm not seeing any yet, which is great. And so we'll go ahead and open the floor open for any Q&A from our audience. If you guys want to put a question in the chat or in the Q&A section, please feel free to do so now. In the meantime, Tim, I'll go ahead and ask you some questions on behalf of our investors. Namely, I want to point out and double tap on a couple things you mentioned there. First off, in a traditional startup, you raise money, you spend it. And hopefully you can make enough money to where the revenue you're making covers your operating expenses in time. You guys aren't doing that. You're taking the money that investors are investing, putting it to work in low risk, high yield investments, and then using the interest from that money to pay the expenses. So instead of racing the clock on we got to grow this at a certain pace in order so we don't run out of capital, you're actually able to take the clock out of the equation.
I would say about 70% of the money does that, right? About 30% of the money is going to building out the team and really just pouring fuel on the fire for the development side of things, staffing out to make, like we just hired, another update actually that I didn't share is we just inked a deal with a chief revenue officer. This is somebody who's worked in the software space for their entire career for about 30 years. And over the past 30 years, they've taken company after company in the med software space, right? So the only nuance is they're coming into the property management side of things, but they've taken softwares that don't have nearly the amount of value that Smart Management has, and he's taken it from doing millions or tens of millions of dollars to doing hundreds of millions of dollars a year, building out the entire team, understanding the entire marketing cycle and sales cycle, and customizing all of that for each of these different companies. I think he's done it with 3 companies over his career over the past 25, 30 years, and has had tremendous success. And so this is somebody who makes millions of dollars a year, is leaving that career because he sees how much potential is here. We've incentivized him with an equity share for being a founding C-suite member, and he's going to be starting in the next 90 days as well. So he's already been working with us on a part-time basis, but he's going to be full-time definitely by the end of the year. So we're super excited about that. And so, some of those things, some of the money is going towards building out the team, building out the dev side of things. There's been a lot of outlay of cash for some of the compliance stuff that we've had to do and things like that. But I mean, the good news is we've bootstrapped this, right? We built this with my money and my dev teams, the partner on the dev team, Brian Fast, who I'm not, we talk about it. We've talked about him in past recordings and webinars. He and I are the ones who contributed all the money, millions and millions of dollars. So it's not like we've had to take on a bunch of venture capital money or tech debt, and we have certain timelines that we need to meet. We've built methodically a software that, like, you literally couldn't rebuild this for less than $50 to $70 million, what we've built, and it would take you 5 years to do it if you could even get it live. And I would venture to bet most people couldn't do it. So, like, we've had this long, slow, long term, but doing it the right way, foundational mindset to building a software that is fully functional, fully malleable, fully evolutionary. Like it can evolve as technology and AI and all these things evolve. Whereas the big, slow, clunky technologies that currently exist, dude, they have to break their entire system to be able to smoothly integrate the things that we can easily integrate in a matter of a few months. So they do it through plugins and all this other stuff, but eventually Appfolio is going to have to break the whole system and rebuild their entire technology all over again. It's going to take them many years to do it, or they either won't do it and they'll just um, ride it out as long as they can, right? Until they can acquire a company like ours in order to then integrate it. So we have some really, really cool stuff. So, anyways, it's a long roundabout answer of saying 70% of the money sitting in this interest-bearing account, 30% has been deployed or is expected to be deployed. And that's the beauty of it. Once we reach a certain amount of users and revenue, we don't need, right? Like we make somewhere between $15 to $25 per unit per month with all the different revenue streams that we've created. And because of that, you talk about hitting 200,000 doors, which is our goal in the next 36 months. 200,000 doors puts us at times 20, call it $20 per unit per month. We're at $4 million a month. We're a $50 million a year company, right? And so we don't need 10 million bucks sitting in a bank account anymore. We have plenty of cash flow coming in. We don't need the interest off of $10 million. So we have plenty of cash flow coming in where it puts us in a position where we could just pull that money back as those investments expire and pay it back to our investors. And then we can just keep on feeding the machine based on the revenue that's coming in.
Fantastic. All right, I got one question here in the Q&A. I'm going to go ahead and answer this question from Jake. Who are your competitors with similar platforms? Is anything proprietary in your process?
Yeah, everything's proprietary in our process. We have, I think, five or six, maybe even seven patents, either processed or in processing right now. And but I mean, we're going toe to toe against all the major players. Appfolio, Yardi, RealPage, Rent Manager, Buildium, um, you name it. Like those are all those companies are multi-billion-dollar companies, right? But they've all been around for a long time. They all have very antiquated technology. I've used them all, and none of them are great. None of them are better than decent. All of them have major flaws, major issues, major gaps. They're all very expensive, and you still need probably 8 to 12 other softwares to manage everything that Smart Management manages. So Appfolio is a property management software. But guess what? You still need QuickBooks because they don't handle ownership financials. You still need Monday.com or Asana because it doesn't handle workflow. You still need an investor management software, right? Because in order to handle your pref payments to your investors, you still need all the communication software, email marketing. You still need the text message application. You still need some sort of a communication platform. You still need Life 360, right? You'd still need all these different apps. You still need short-term rental management software. You'd still need digital signatures, like Dropbox. You still need all of those things with Appfolio or with Entrata or with Yardi or with Buildium. You still need all those other softwares. We have it all built in one place. It's an all-in-one platform where you literally only have one subscription, and it is a fraction of the price of what just the property management software costs, right? So not only are you saving money on like we spend $300,000 a year on software costs between all of those things. By moving over to Smart Management, we'll drop that down to around $150,000 a year, right? Just simply moving over into a singular platform that has everything in one place. So yeah, we're going toe to toe against all those big boys, and like we've used Appfolio for a decade in our own property management, but we've also used Entrata and Yardi and Buildium and Rent Manager and RealPage through all the other third-party management companies that we've worked with. And so we've had access to all those systems. We've played through all of them. We know exactly what the reporting looks like and what the database looks like and what the functionality and usability looks like. And none of them are as intuitive as smart management. None of them have the automations built in like smart management. None of them have um, the SOPs built in like smart management. None of them prioritize tasks or prioritize um, and optimize NOI the way that smart management does. Not even close. So, yeah, we're really excited about it and leading the charge on all of it.
So, Tim, let's say that someone here this evening is interested in learning more about the depreciation opportunity and the tax benefits and how they can get that for both passive income or to offset their W-2 income. How would they go about learning how your particular opportunities, tax mitigation capabilities applies to them?
Yep. So first off, I'm not a CPA, right? But we've worked with lots of CPAs, lots of tax attorneys to create this offering and um, talked with a lot of investors, CPAs, and advisors and financial advisors and stuff too. And and so we've gone through this process and we've tried to simplify it as best we can. So first off, depreciation. You had mentioned something actually earlier in your slides, Donato, and I know like we all say you have to say projected or targeted returns because we don't know what the future holds from a return metric. But one of the things that is not projected is the amount of depreciation. It is a fixed amount. If you come in for $100,000, we are going to give you predictably $300,000 of depreciation for this year in 2026. So it's no more, no less. You are getting $300,000 of depreciation in 2026. So you can expect that and plan accordingly that way. Now, who can benefit from depreciation? So depreciation is a passive loss, which means anybody and all can use it to offset passive gains, right? So you can look up passive gains. Those are things like rents and LP positions and preferred returns and K1s. You will get a K1 from us with $300,000 of passive loss, and you can utilize that to offset your K1s of any other passive activity and passive gains. So that's number one. Number two is if you have any sort of active component, right? Similar to what Donato had alluded to before, like, and you can create an economic unit. So I'll give you an example. We have several real estate professionals who have their own rental portfolios and are going to utilize or are utilizing smart management to manage their own rental portfolio. So not only are they in the real estate space and they're real estate professionals or their spouse is a real estate professional, but they're utilizing smart management to manage their own properties. They're giving us feedback on it and they're going out and like we give all of our investors an affiliate link and a bunch of marketing assets, and you can go and promote this, right, to other real estate professionals that you might know or people who in your network who own rental properties. And just the process of sharing an affiliate link or telling somebody about smart management shows an active effort in being involved in smart management, right? You're doing it on your own time, on your own dollars, your own efforts. And by doing that, there's certain metrics, either hourly or certain other qualifications to meet to be an active participant, an active LP in smart management. Now, your K1 comes to you at the end of the year and it's assumed everybody's passive, and then you can elect to be active at the personal level. So you can show, hey, I'm a real estate professional. I'm using this. I shared this with other people in my network, and I'm giving business development feedback to the smart management team in order to better improve the software. All those things check the box. Um, if you're not a real estate professional, some people who are utilizing the short-term rental strategy, um, like that can be combined using if you own a short-term rental and you manage it for over 100 hours a year, and I think there's certain qualifications, 100 or 500 hours per year, you can group this with that activity and utilize those hours that you use for your short-term rental property and combine it with smart management in order to meet the qualifying hourly requirements. Then there's also something like an economic unit. So I'll give you an example. We have an investor who owns a appliance repair shop. So he doesn't own any rental real estate. but he works with property owners and property managers all the time. And because he has a similar client base, he can group his efforts of sharing smart management and sharing his affiliate link and sharing insights about the software, as well as giving us feedback. And potentially, we could maybe even make an affiliate structure with him, um, to utilize him for repairs and appliance purchases in like the region that he works in. Like there could be some potential for there. But even if he doesn't do that, by having this overlap of customer base, right? There are customers in the United States, which is where Smart Management is also located. They own rental real estate, which is who Smart Management customers are, right? There's, I don't know, 3 or 4 different boxes to check, but it checks all those different boxes. And so by doing that, he can group it and create an economic unit of taking his hours that he spends in his appliance repair business, which is, full time. So whatever that is, 40 hours a week, 50 hours or 50 weeks a year, 2,000 hours a year that he spends on that. He doesn't have to spend any additional time in smart management because he's able to group those things on his tax return as an economic unit. And because he groups them together, he's then able to do that. I've seen people do this with their spouse, right? Like let's say that they're a full-time white collar professional, but their spouse becomes a real estate professional or has a marketing business that they create in order to then go and promote smart management, and their spouse puts in the time and qualifying hours in order to meet an active requirement. And again, we have a playbook on all this stuff, so I can share that with you. We have kind of like a high level overview in the offering memorandum, and then we have what's called a strategic partner playbook, where we give these insights to you and different strategies. We give you an affiliate link. We give you a bunch of marketing material and assets. We give you, like we have a Google Drive document where you can give business insights and feedback to us on how to improve the software or business development suggestions on how to expand our network, and people to go and communicate with and connect with. All those things are active efforts and active participation towards the requirements to become an active participant in your smart management investment. And so we have many, many people who have invested in order to be active, but you don't have to be, right? If you don't want to be, you don't have to be, and you could just offset your passive gains without having to do anything with this. Or, right, you just sit on the depreciation and you invest because the returns are fantastic and it's an exciting front end of a high growth AI prop tech SaaS business, that has mitigated all the risks and has gotten past all the high risk stuff, that is actively generating revenue from right now, from the time that you invest. So like it's not a question mark of is it work? It works. We are having success. It's just a question of how big do we go and how big do we succeed. And so we're gonna win. It's just how big do we win? So depending on what all that looks like, I know I threw a lot at you guys, but there's a lot of different ways that you can look at this. And so if you're interested in it, we're happy to share the investor playbook and show all the resources in order to then be able to take advantage of it from an active participation standpoint. But everybody can get the passive benefits from it too.
Perfect. So if you guys have any questions about getting that playbook, you can email us at updates@timberviewcapital.com or reach out to us at that phone number. But it looks like we've gone ahead and gone through all of our chat questions in our Q&A. So go ahead and say thank you, Tim, for spending some time with us this evening and sharing some updates on how smart management is going, the fact that you've already onboarded to your own portfolio, that you're on track to add more doors over the next few months is fantastic. And Tyson will go ahead and turn it over to you for any closing comments.
Thanks, guys. Fantastic webinar. Love that you guys pounded through all the questions. There is one thing that I want to cover with a little more detail. So, number one, guys, if you're investing with us, you're going to use the depreciation in a passive manner. Sooner or later, you're going to have income that's going to catch up with you. So, don't think that you're not going to use that. If you choose to go the active route, then obviously you have to jump through the hoops. Now, one thing I do want to talk about that you guys or your CPAs are going to tell you about this. You can't take 300,000 with 100,000 investment unless you have basis in that. And so Tim has devised a way that you get basis. And Tim, can you talk a little bit about how you set that up, and then how are they protected against some type of bad event associated with that loan?
Yep, good question. This will be naturally be a question that you get from your CPA, right? A lot of CPAs haven't seen this, or they're, they're like, how does that work? Um, so this was taken. Well, let me say this first. If you can't use all the depreciation in a passive manner, like Tyson's talking about this year, you get something called suspended losses. All that means is it rolls forward to next year, or the next year, or the next year, until you can use the depreciation against it. So it's a great way to you kind of fill up the kitty on making sure you have a bunch of losses in place. If and when you have future gains, it automatically offsets those things and can do that on the passive side. So it just rolls forward. It's not like a use it or lose it thing. It's just it rolls forward until you do use it, or you sell and you get all your money back, and it just offsets your recapture. So wanted to mention that on the suspended losses and the roll forward on that. So that's number one. So how do we create the depreciation? We took this from the playbook of what the movies do. So when you think about a movie like Toy Story, Pixar is the parent entity, and it creates a sub entity, and it sells the rights, the exclusive rights to this movie to this sub entity, and it buys it for a certain, like, called $100 million. Now that sub entity has $100 million. It's a software. It's like going to Best Buy and buying Microsoft 365 off the shelf, and you buy it for $1,000, and you can write it off as your expenses the first year for $1,000. Software and the way that this purchase works is pretty much the same thing. We're buying the software from a parent entity and creating a cost basis that way. The exclusive rights for property management and for short-term rental property management. So that's what is the purchase that creates the cost basis of X number of dollars. Call it $40 million. $40 million. Now we now have $40 million of depreciation. Because of the big beautiful bill, we can usually depreciation in software happens over 3 to 7 years, depending on the type of software. This gets accelerated into all in year one because of bonus depreciation. So due to that, we can accelerate it all into year one, and we can take $40 million of depreciation in 2026. Now, the entity that you're investing in is an LLC. An LLC allows for disproportionate allocation of gains and losses. So even though you might have a smaller percentage of ownership, we can allocate a larger percentage of depreciation to our investors. And that's what we're doing. I'm not getting any depreciation other than the money that I'm investing. And by the way, I'm invested in $500,000 into smart management. So I have my portion of depreciation only because I'm an investor, but my general partnership share doesn't get any depreciation. It's 100% being allocated to our investors in 2026. So that's why we can give more than what you're actually investing. But we're not raising $40 million. We're only raising probably $15 million. And we have some people in at a 1-to-1 depreciation and some lower. And so we're able to give up about 3-to-1 depreciation to our investor base. So that's how we're getting this much depreciation and how we're able to allocate this much depreciation. A question you will get from your CPA is, you only invested 100 grand. You can only write off up to what your total risk is. And so there needs to be some additional at-risk component. And so here's what that means. And here's what we've created. We are buying the software. We're buying that, let's call it $40 million. We're buying that on a seller finance note. So we're really only putting about 5% down on it. The rest of it is in a seller finance note. And on that seller finance note, what we've been able to do is create a guarantee on that. And so if you invest 100 grand, you sign a guarantee, a limited guarantee on $200,000 more, whatever your depreciation amount is. So you're not signing it on any other corporate liabilities. There's no other corporate risk. And it's not on 40 million or $38 million. It's only on your percentage of depreciation that you're taking. And so you are signing on a guarantee, which in the eyes is legitimized by the IRS as an additional at-risk component. So that way you can get the additional depreciation. Now, the question then becomes, how much real risk do I have here, right? Like, what happens if everything goes sideways? Do I now have to pay somebody $200,000 more because of this guarantee that I signed? And here's what I can say. In the purchase agreement on us buying this um, short-term rental software, right, and having exclusive rights on that, we have a commercial viability clause in there, meaning if the software is not commercially viable, and I think it's set at $10 million of annual revenue, any point up to $10 million of generating revenue, I have the unilateral, because I'm the main partner and the managing member of this entity. I have the unilateral ability to hand the software back, which by handing the software back, it eliminates the seller finance note and eliminates the personal guarantee. So if for any reason this property management software is commercially unviable and we can't hit the mark, or let's say something's out of our hands and our like payment processor goes out of business. We have redundancies for this, so we actually have two payment processors. So this probably wouldn't happen unless there's like some really chaotic thing that occurs. But we have that solved. Whereas if both the payment processors go down, we can't collect. Everybody leaves. Everybody's upset and angry and no longer wants to do business with Smart Management. I have the unilateral ability to hand back the software to that parent entity, right? And it dissolves the seller finance agreement, which also dissolves the guarantee that we signed, right? I signed it too for the amount of depreciation that I have, and it eliminates that. So the worst case scenario here in that scenario is you recapture the depreciation. That's the worst case scenario. And over
All right, thank
time,
you.
we return your capital, we return your principal, right? If 70% of the money is sitting in an interest-bearing account, we can return 70% of it right then and there. You lose 30% and you have to recapture. That would be, in my eyes, the worst case scenario. Or we let the money sit there, continue accruing interest for another 2 years or so, and we give everybody back 100% of their money. That's the other option. And you still recapture. So there will be a recapture in the future, since we're talking about that. Um, we have a 9-year seller finance note. We have the option to extend for another 9 years on that. And whenever that note gets paid off, either we refinance, we sell, private equity comes in and buys us, we go public and pay it off, like whatever that looks like, when that note gets paid back is when there's a recapture on the $300,000. So if that happens after 9 years and we're fully depreciated, it would just be recaptured at what the long-term thing is, right? What the long-term rate would be. If it happens in a shorter amount of time, let's say we got bought out next year or 2 years from now, we would recapture at an earned income tax bracket. And so if you don't fully, it happens with real estate too, right? Like if you it has to meet whatever the natural timeline is. And then after that, then it's just long-term capital gains. If it happens in less than what that 3 to 7 year timeline would have been, if we didn't accelerate it, then it would be short-term capital gains. So if we wait 9 years until that's the case, then it's a limited recapture, and we would not be paying off the loan and clearing out the loan unless there's some sort of capital event as well, right? So unless we have some sort of massive income, either from revenue or from a partial sale or a full sale, that's when we would be paying that off, because I wouldn't have anybody recapture unless we can also give them the money to be able to offset and cover whatever their tax liability would be. So I'm in the same boat, rowing in the same direction with you as an investor. I'm in for $500,000 of my own personal money. And several of my close friends, family members, and business partners are in on this as well. So like we're all in the same boat. We're all rowing in the same direction. We have aligned goals, aligned visions of what this plays out like and what it looks like. And we would only be clearing out that note. It would also clear out the liability, but then that's when the recapture gets set in.
So, guys, you're just going to need to make another move when the recapture rolls around.
Yeah,
So
it's a kick the can down the road kind of a thing, right? So it's
it's
like, what is
you
the
just
time value of your money, right? Having all this money right now and not having a tax and letting the equity grow in this business that is a high growth business gets to 500,000 units or 1,000,000 units, and all of a sudden that $100,000 that you would have paid to the government, not only do you get back, but you also get another three, four, $500,000 of equity value in this company. In addition to that, like absolutely it's worth paying the recapture on 300 grand at long-term capital gains basis, right, which is 60
it's the
grand or
fastest
something.
way to create exponential growth is to stop paying full taxes and take that money and invest it in something else like this.
100%.
Right?
Yep.
It doesn't get any better than that. So, guys, I just want to remind you that Myra dropped all of the links for the the QR codes. All the QR code links are actually in the chat. So if you missed any of those, you can drop in there and get them. If you think of any questions after the fact, it looks like we've cleaned them all up for tonight. But please just shoot us a text. We're happy to jump on a call with you, or you can shoot us an email. If your CPA has questions, we can set up a meeting with Tim. They're more than happy to get their tax specialist on as well, and run through how this was set up, and hopefully make your CPA comfortable with the situation. Tim, thank you so much for coming. Really appreciate you letting Timberview Capital Network invest with your group on this. I have full confidence in you. I've been in Tim's mastermind for many years, and he's a straight shooter, and he has a really, really strong team that's backing this property management system. So I've got full faith in you, and I'm sure everything's going to go great. And thank you again so much for coming. And guys, we're going to have a little Cobb Club breakout now. So those of you in the Cobb Club, Myra will be dropping that in, and we're going to do a little breakout session. But Tim, thanks a lot. Great to see you, and appreciate you letting us join you on this deal.
Appreciate you guys. Thanks for having me here. If you guys have any questions, don't hesitate to reach out. Thanks, y'all. Have a great night.